The markets are very complex, and also they're interdependent. Knowing what to look for in the market, understanding how to read macroeconomic sentiment, and knowing how to read the market as indicators change their directional correlations, knowing how to stack probabilities, and then summarize all of those actions into one simple to understand daily risk management code that thinks in 3 dimensions at the same time absolutely makes the difference between you succeeding and failing inside financial markets. In this video, I'll share deep secrets on how to do your daily 3-dimensional risk management strategies. It's going to be awesome. Let's run the numbers. Bitcoin is currently down 0.48% to 19,111. Ethereum is down 1.61% to 1277. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. If you're new, a very warm welcome and welcome back, KS family. If you would like daily updates on price movements in the crypto market, as well as the stock market 7 days a week, 365 days a year, please subscribe to YouTube. Thank you very much to our moderators for keeping our community safe from scammers. And please note, I don't have WhatsApp or Telegram. All financial markets can get incredibly volatile, and we know that all investors become traders anytime they buy or sell. I've introduced BORSOG code version 3 for you. This will make it much easier to understand and apply your BORSOG codes. BORSOG comes from rule 621, buy on red, sell on green. The reason that we do this is because of rule 359, be on the right side of the percentage. Recently, when the CPI print came in hotter than expected, we saw a dip down into an institutional buy level in the range of 17,931 in Bitcoin to 18,407. There was a smart money sell range from 19,462 to 23,40. We saw price wick down, then wick back up. This was an excellent time to BORSOG. Understanding your institutional levels is really important. And knowing what you will do if the price goes against you, goes down, or goes up is also equally as important. That's why we have the BORSOG code, and this is version 3, so it's an improvement to previous BORSOG codes. Please use this one going forward. We know as crypto technical analysts that price is always moving in a wave. That's rule 4. And that means if we get on the right side of the percentage, we can be on the wrong side of the trade, but on the right side of the percentage and still do very well. And this is exactly why we need to put the BORSOG code through each and every day to get on the right side of the percentage. The BORSOG code has 3 different parts. And why would you do this? What's it all about? It's all about your daily risk management. The more flexible you are, the more adaptive to the market, the more the market will reward you. And that's what it's all about. Flexibility is incredibly important. Don't think about the BORSOG code as something you have to get right. You're just seeking to improve each and every day. The market controls your return, and the only way you can get a return out of the market is with knowledge. So doing your BORSOG code each and every day gets you into sync with the market. We have an incredible global KS family, and I want to let you know how much I appreciate each and every one of you. I'd also like to let you know Divine Art is the Tails CTKS Partial Masterclass Scholarship awardee. Divine Art, I'm so proud. Congratulations for your active learning each and every day. And also a very big thank you to Tails for your kind generosity. You're an amazing person. And Tails is also a CTKS ambassador. The next CTKS Partial Masterclass Scholarship coming out is one from me. And the way to actually be in the real running for these scholarships, you need to work hard, The CTKS Masterclass requires a lot of persistence, dedication, and commitment. It's also about positive excellence and having the right outlook on life and the markets. If you would like to be considered for a partial CTKS Masterclass scholarship, the link for the application is in the description of this video. It's critical to remember that you control your trades or investments, but the market controls the returns. Returns are made from knowledge and courage, and the market penalizes blame and gambling. The focus of your daily three-dimensional risk management thinking is all about coming up with a code that makes you think in 3 dimensions. What if the market goes down? How would my portfolio get hit? What if it goes neutral? How would my portfolio be indicated? If it goes up, how would my portfolio be indicated? And how in synchronization am I with the market? If you have the Midas touch, you could say that you are 100% in sync. You're in the zone, you're in the flow state. But if you feel that you're doing everything backwards, you're buying when you should sell, you're selling when you should buy, you have very low synchronization. But that's nothing to be ashamed of. That's not a problem at all. The market is always changing its character. It will synchronize and desynchronize you all the time. A lack of synchronization isn't a personal reflection on anything. It's a personal reflection on the market and what the market is doing. How do you read the BORSOG code? You know it's in 3 sections. One is, what is the market doing in the next 24 hours? And you just pick the highest percentage. For example, if you think the market has a 70% chance of going down, you would put D70 into that first area. Now, what is this guy in the middle? And what are these traffic light symbols? It's literally like a traffic light. If you feel the market is going down and you give it a 70% probability in the next 24 hours, so these codes are only lasting for 24 hours, what is the percent down, 70%? What could that do to your profitability, to your portfolio? Previously, we used against, neutral, and for, BORSOG ANF. I'm changing this to down, neutral, and up. Down, neutral, and up. So D and U. The reason for that, I think it just helps people to get a very, very clear understanding of what's going on. So for example, if there's a 70%, if you feel there's a 70% probability that the market is going down, and you say, if this happens, I predict 60% of my portfolio will go down. That's 60% of the investments that you hold, the trades that you hold. And you say, well, 10%, they're just going to go flat. And I think 30% I've got as a hedge. I believe they'll go up. Because we always look at what moves with the gravity of the markets, but also what moves against us. Having a hedging portfolio isn't a bad idea. And you can see this just scratches the surface on things that you need to think about. And that's what the code is there for, each and every day. What we're basically saying, we think the probability of the market going down is 70%. If it goes down, 60% of your investments or your trades would be expected to decrease in price. 10% will go basically nowhere, and 30% of what you have in your portfolio is expected to go up. And your synchronization factor, your Midas touch, your flow state or in the zone state is just 30% right now. I put out episode 684, Bottom In, what professionals look for in stock markets and crypto. This was a really, really deep dive, a very important video for you to see. If you've not seen it or you'd like to see it again, please have a look at it. And Tails in yesterday's comments said it really well. Thank you, my friend. Everybody here should share this one out on your socials. I think it is a great introduction to our way for anyone struggling with the markets out there. And May and Mist, very nice to hear from you. High quality learning, putting the pieces together. Thank you, my friend. Thank you also to Ivan and to everybody else who commented. That previous video will give you a lot of knowledge in terms of what to look for, but that's only about perhaps 5% of the knowledge that you'll learn in the masterclass. As a community, we focus on the crypto market, but we must understand the stock market because Bitcoin, basically the ruler of the crypto space. It can't escape the stock market's gravity. And what are stock markets driven by? They're driven by profitability, earnings. And again, we're in earnings season. When you start to dig more deeply, you'll start to understand that certain earnings will come out or be anticipated to be positive and others negative. For example, on Tuesday, Goldman Sachs is expected to get hammered. On Wednesday, the Nasdaq is expected to take a big hit. That's the Nasdaq group, not the Nasdaq index. On Thursday, AT&T, Dow and Philip Morris are expected to take hits, but it's really interesting. Alaska Airlines, American Airlines and United Airlines, as part of the reopening trade, they're all expected to go gangbusters. On Friday, we expect American Express to report stronger than expected earnings, and Schlumberger as well as a couple of others. An understanding of how earnings in major market movers impact the stock markets will take a certain percentage of your focus for the down percentage or the up percentage or whatever you feel that percentage may be. Because we know crypto cannot escape the stock market's gravity, we must pay attention. And looking at the structural smart money buy and sell levels, these Stanfield zones, these zones are formed from not recent price action, but all of price action. And we can see at the moment that we've come basically back to a midway point in between this institutional buy level and this institutional sell level. And this is the S&P 500. On Monday, where do you think the stock market, the S&P 500, will go towards? This is another way of trying to determine this first initial part of the BORSOG code. It's always a little bit hard to predict where something will go when that index is actually not trading 24 hours a day. So slack. Bitcoin trades 24 hours a day, 7 days a week. And when we look at the institutional levels on Bitcoin, we can see support at 17,931 to 18,407. Bitcoin is currently 19,115. We also know that we're up against, coming close to the Armageddon line. What happens when the Armageddon line gets price momentum underneath it? It's been defended many times, but you may notice this particular spike down was about the longest spike that we've had just in recent price history, just matching this one. So the concept here, the concrete is getting cracked. What do I mean by that? You can see this particular structure, the concrete is getting cracked. And when you have cracks in the concrete, you can expect the foundations to get a little bit shaky. Unfortunately, what you'll find in markets is most people have a 24-hour memory. They only basically base their decisions on what happened 24 hours ago. That's called the goldfish principle. This is why I call this a cracking of the concrete. We would have, if the concrete was really stable and was supportive of upward price momentum, we wouldn't expect that spike to come down as low as it did. We would have expected a shorter spike. But fortunately, the buyers were there and they stepped in. And this is largely because of intervention in the UK markets. And this is another reason that I go through major news headlines at the start of each episode. But as BORSOGers, we always look for market synchronization and market timing to get in and out of trades. Another factor influencing your down and flat and up prediction and the percentage you think is the DXY, the US dollar currency index. As the DXY goes up, yields go up. And that places pressure on the stock market, and the stock market places pressure on crypto. And places pressure means that the prices come down. You can see how much there is to know. I do deep dives on all of this inside the masterclass. But the concept is, if the DXY actually rallies, when it wakes up, it's currently asleep. If we get a surging past this 114, 142 mark, we would expect that the markets would sell down. If we get a retracement below this 112.760 mark, that's looking really good. And the fact is that the dollar has been losing power, upward momentum. Inside the masterclass, I talk about many advanced concepts, and LV13, you may like to check that one out for the masterclass students. And how does looking at the overall market sentiment actually bear on that first number? The first number here is this one that I'm talking about, D70. Probability 24 hours, 70% down. We can see the fear gauge of the stock market has been coming up, and it's just coming up and up and up. This is really unusual for the VIX. The VIX is typically very spiky. As fear has increased in the market, what has, for example, the NASDAQ 100 done? It's remained below resistance. So we've got this very steep resistance level on the NASDAQ. And we've seen resistances play out on all major indices. We can see that bond prices are remaining under pressure. Yields are looking like they may actually break out. When the yields are in this current state of economics that we find ourselves, the yields are negatively associated with crypto and the stock market. Previously, they were positively correlated, and this is something that you need to do. You must always remain flexible about how you read the footprints of the market. Associations will change, and just be there for when they change and say, okay, they're changing, let's go with that. Let's have a look at gold, geopolitical risk. Even though there's some very dangerous things out there in the world at the moment, such as the potential of World War III, other invasions, it's not a case that gold is picking up any particular problem. And you might say, oh, Ken, that's because the dollar is so strong. And of course, there's a lot of truth in that. But when gold picks up any geopolitical win that it thinks will manifest itself, it tends to spike. We can also see with the OPEC Plus restrictions on production that oil first rallied and it's now coming back, because what is the concept that people are reading in out there? There's going to be a recession. The central banks are destroying demand with monetary policy, and therefore oil will come down because not as many people will be using it. We also keep an eye on junk bonds. Junk bonds is very good to look at. So all of these 8 charts will influence your first part of the BORSOG code. You can see this down 70 or whatever percentage you want. Could be down, could be neutral, could be up. And I'm just using down, neutral and up for both sections now, just to make it easier for you. It may require a little bit of cutting over time, but just think down and up, and neutral is just in between. And of course, we need to look at inflation. What did we see with the 10-year break-even inflation rate and the 5-year and the 5-year forward inflation expectation rate? They've all been absolutely pole vaulting upwards. What does this mean? That means tighter monetary policy, more demand destruction. And what do we notice with the Fed balance sheet? It's just flattened out. It hasn't come down, so that's a minor positive. What did we notice with the CPI? It came back up again. This is a negative. All of these factors will influence that very first part of your BORSOG version 3 code. You can also look at how precious metals are performing. You can also look at all the 2-year, the 20-year, the 5-year, the 10-year and the 30-year yields as well as predictions on the federal funds rate. There's actually so much more to this. You may think, oh, that's all I need to look at. Not even close. Understanding and doing deep dives is what we do inside the CryptoTradingKS Masterclass. The first thing that we do is to mark up our charts with the CTKS method. This is very important for understanding where institutional buy and sell levels are. And Masterclass students, in the next coming weeks, I'll be releasing the upgrade of the CTKS method to version 2. It's a ripper. Because the stock markets and crypto have become very positively correlated, you can actually use crypto to decipher what could happen in the stock market. How cool is that? The question is, what do we see in current price action at the moment? We're overcoming a very short-term daily resistance level just now, but will it turn to support or will it be resisted again? We're still under multiple levels of resistance and higher levels of resistance at the moment. We can also see that we've lost a very key significant support level and we've been rejected from that. The markets are basically throwing negative price momentum on crypto at the moment through Bitcoin. And a lot of people will say, hey, Ken, I don't even do Bitcoin. I'm not interested in Bitcoin. I have my beloved alt. Oh, I've got a bag of those. And there's nothing to do with Bitcoin. Bitcoin doesn't matter. Well, we know from Rule 45, your beloved alts cannot escape Bitcoin's gravity. If you don't pay attention to Bitcoin, you're going to be in trouble. You're going to take a lot of unnecessary losses. And others will say, oh, Ken, I don't mind looking at Bitcoin, but I hate the stock market. I don't want to look at it. It's so boring. Yeah, it may be boring, but it's influencing Bitcoin. And Bitcoin is influencing your alts. You better look at it because it will make the difference. And that's what professional traders and investors do. It's also important to look at components sitting underneath the crypto engine. And when we look at crypto total market cap, we can see a very different picture to when we look at Bitcoin. What we're actually seeing right here, right now, is a rejection of this resistance line and much, much weaker price momentum, total market capitalization momentum. And it's a bit easier when we take Bitcoin out of the picture and we just look at all the alts. That includes Ethereum and every other alt. You can see the alts are so weak. The crypto market is being propped up by Bitcoin currently. And when we just look at the crypto market without Ethereum and without Bitcoin, what do we see here? It's really weak. It's under one level of resistance here, and it's just starting to pass through a very tight level of resistance. But the problem is when you get a big sell down like this, you have a lot of momentum. It doesn't necessarily mean it will rebound. It can, but just think, if there's too much negative momentum, it generally carries forward in that direction until we've had a substantial break in resistance. In kind of a weird way, Ethereum is actually looking the healthiest of an unhealthy group at the moment, but you should always bear in mind that Ethereum is very much below resistance. It was absolutely slaughtered when it did its upgrade. These things all contextualize where you think the market can go. And also looking into the top 8 and seeing how the Bitcoin's gravity is impinging upon these top alts is incredibly important. Bitcoin's gravity is this blue line. We can see, for example, Ethereum following Bitcoin's gravity, doing that crack in the concrete and just recovering. But we know the markets are under negative momentum. It doesn't mean they'll come down, but they're under negative momentum. It's just something to keep in mind. BNB did that crack in the concrete as well and recovered. But we haven't seen a continuation of recovery. Of course, it's the weekend at the moment, so we'll look at liquidations shortly. But we can see ADA, that cracked concrete, ADA's got some cracks in it as well. Unfortunately, Charles, please do something. So many fantastic ADA projects out there. They need you. XRP, crack the concrete, coming back to a particular support level. It's just wobbling around that at the moment. Solana, looking more weak, not as weak as ADA. And this is what you want to do when you're trying to figure out that middle section. This particular one, this is all about your portfolio. How is Bitcoin's gravity impacting your beloved alts? You need to form a really good picture of what's happening inside your portfolio. And when we look at Doge, we can see Doge crack the concrete and is just trying to get above this resistance level at the moment. Very interesting. The dot is starting to act with a bit of strength, but we know that there's substantial resistance coming down from multiple levels at the moment. Go dot, go Gavin. What about Matic? What do we see with Matic? Crack the concrete dramatically and then rocketed back up. The buyers stepped in and pushed the price up. But how many buyers can continuously do that? The more the concrete gets cracked, the more probability we have of downward price momentum. A lot of people make an arbitrary distinction between investors and traders. The truth is, all investors become traders anytime they buy or sell. Having the understanding and the mental strength to trade is very, very valuable to any investor. When you assess your portfolio risks, you're actually looking at your investing or hodling bag and also your trading portfolio. For mainstream investors, they have pretty much limited trading funds. But this is something that I think everybody should look seriously into and start to question if we're going to see rapid rundowns in price, and that could well happen. Trading will be your absolute best friend because you can actually take account and take profitability from volatility. That's what traders do. More than that, traders look at timing entries and exits into the market. And we can see the global markets are a little bit weak at the moment. And if we take out these previous lows in the ACWI, I would suggest, and especially if we get one of these long spikes downwards, we could be in for a rocking roller coaster ride. This is why trading is an essential skill for every single investor. In the masterclass, we cover off so many more elements than what we do each and every day. And when we look at the shorts and the longs, the shorts got squeezed and that caused this massive ramp up in price. But the macroeconomic situation is pretty much unchanged. There's a lot of negative volatility inside the markets at the moment, but the shorts across the weekend have increased their stakes, but not by much. And we can see the longs are starting to get more and more reluctant to buy the dip. Why are the longs getting more and more reluctant? Because they're getting liquidated. What about the shorts? We can see a bit of a push nearly from the Armageddon line. Of course, just recently the shorts are starting to get squeezed. Let's turn to liquidations to see how significant this is. We can see 34.02 million in liquidations across 18,503 positions. Really low, but this is the weekend. We would expect that. And when we look at 24-hour liquidations, as we thought, 71% of total liquidations, 24 hours, have been long liquidations. Across the past 12 hours, about 68% long. Across the past 4 hours, about 81% long. And across the last hour, about 87% short. And this just goes perfectly with what we were talking about in the chart. And we can see weekend trading very small, very limited. One thing that I would like you to keep in mind when you actually do the analysis of this resistance, just flowing through here, you can see we cut above that resistance, rallied a bit, and then sunk. Now this is not good because we're already under multiple levels of resistance here, and now we've got another one. And when it comes to the synchronization factor, this is all about how synchronized in with the market do you feel? Do you feel you've got the Midas touch? Everything you do, every trade you place, every buy that you make is just perfect. It's just rock solid. You're in the zone. You're in the flow. Or does it feel the exact opposite of that? It's really important to understand the markets always change their nature. You can be rocking and rolling, and then you can be sitting on the sidewalk the next day. This is markets. This is what they do. That synchronization factor is critically important. And it's just your feeling as to how confident and effective you've been just recently. And don't worry about having a low synchronization score. They're actually incredibly important to have. As a community, we're deeply into positive excellence. Why? Why is this important? Because you should be happy along the journey of life, not just when you reach a made-up destination. You should be happy each and every day. How do we become happy and not get into conflict? We need inner peace and outer peace. We must believe that we're worthy of success. Integrity is incredibly important, as is decency, kindness. Having courage is incredibly important as well, to beat fear. When fear is the CEO of your emotions, your life will get run off into a ditch. That's because fear always makes you act contrary to what you need to be acting. And that's why often when you act on fear, you actually create the thing that you fear. Instead, courage is incredibly different. Courage says to fear, take a hike. Just go on a long journey, fear. I'll call you when I need you. Fear is, of course, important in certain circumstances, but when it runs things, when it runs the show, things get very ugly. It takes a lot of commitment each and every day to do your BORSOG code, and that commitment is for you. Every time you put your BORSOG code forward, you're saying to the market, I'm paying attention. I'm respecting you, market. Because anytime you don't respect the market will humble you. All long-term traders and investors have been purged by fire. They're used to being humbled by the market. That's why we've got incredible flexibility. But we also have persistence and commitment. I thought talking about persistence and commitment would be really, really good because it's so incredibly important. And I want to honor you as well by being here on the weekend, listening to this, improving yourself, improving your financial prosperity, going forward with more and more knowledge. You're just awesome. I hope this video has given you a bit of a window into what these BORSOG codes mean, and we'll just do down and up, and anything that's not down or up is just neutral, and we can use that across the entire code. A lot of people were finding confusion with the ANF, against and for, as something can be against if it's going one way and for if it's going the same way but under different circumstances, for example under leverage. So I thought it was probably just a much easier thing to say down and up, and if it's not down or up, it's just neutral. A quick thing to talk about is your hedging. We often talk about the greatest gainers and the greatest losers. From a couple of days ago, these were the greatest gainers. And greatest gainers can move contrary to Bitcoin's gravity, but they will always be pulled into alignment with Bitcoin's gravity over time. Sometimes the greatest losers one day were the previous day's greatest gainers, so just keep this in mind. Sometimes you can get a ramping up of price. For example, in EGLD, even though Bitcoin's gravity is coming down, EGLD is saying, no, I want to party. This is why looking through the crypto market is a really, really good thing to do, and you want to balance your portfolio out to a degree. This is how it's possible to have an up with a percentage, even though prices could be coming down. And this is good to keep on thinking about. There are just so many methods of assessing strength, and we've got some particularly powerful ones inside the masterclass. Please let me know if you have any other questions about this version 3 BORSOG code. Just remember, down or up or not that, it's neutral. I'm always doing everything I can to improve the quality of what I share each and every day. Your success is my focus. If there's anything I can do to help you to understand this better, please let me know in the comments. Please consider sharing and liking this video and also subscribing to the channel. We would love to have you as a part of our globally extended KS family. If you have friends or family who could benefit from positive excellence and what we do each and every day here, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Thank you to our moderators for keeping our community safe from scammers. And please note, I don't have WhatsApp or Telegram. Thank you also to the CTKS ambassadors for assisting Masterclass students. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the tax software I use, and links to the CryptoTradingKS Masterclass and the partial scholarship. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.